Hello everybody. Today I'm going to talk about finance management in Microsoft Dynamics 365 Business Central. Business Central provides accounting and finance functionalities to help you track and analyze your business information. You can efficiently manage your general ledger, payables, receivables, inventory, analytical accounting, fixed assets, and cash flow, in addition to performing bank reconciliations and collections. You can even manage your financial processes across multiple currencies, locations, or companies. The first screen we see of this modern user interface is the Role Center. This includes all the key functionalities needed for a particular role in the company. Microsoft Dynamics 365 Business Central offers more than 20 role centers. Financial users can use one of the following: accountant, accounting manager, outsourced accounting manager, accounts payable coordinator, accounts receivable coordinator, and bookkeeper. The role center that I'm using for today's demo is the Accounting Manager homepage. It includes the most important functionalities this user would like to see. The role center is a dashboard with activity tiles that shows you key figures in real time and gives you quick access to data. At the top of the screen, you have a menu of all the functionalities that this role would normally access, like the finance module, journals, cash management, cost accounting, and fixed assets. In the navigation bar at the top, you can quickly switch between lists you use most often. Here you will see other areas such as posted documents with the various types of documents that the company has posted. In the ribbon at the top of the page, you have access to more actions such as the opening and the most commonly used financial reports and statements in Excel. With actions, you have shortcuts to easily create new documents. You can open the payment journal or run different periodic accounting tasks such as the calculation of depreciation, payment reconciliation, intrastat, and VAT reporting. From here, I have quick access to the most important finance reports. In activities, you've got a set of key performance indicators which helps you see the most important business indicators for your role. The General Ledger in Business Central stores your financial data, and the Chart of Accounts shows the accounts that all General Ledger entries are posted to. Dynamics 365 includes a standard chart of accounts that is ready to support your business. The Chart of Accounts shows all General Ledger accounts. From the Chart of Accounts, you can do things like view reports that show General Ledger entries and balances, choose your income statement, open the GL account card to add or change settings, see a list of posting groups that post to that account, and view separate debit and credit balances for a single account. You can add, change, or delete General Ledger accounts. You can personalize the structure of your financial statements by mapping General Ledger accounts to account categories. The GL account categories windows shows your categories and subcategories and the GL accounts that are assigned to them. You can create new subcategories and assign those categories to existing accounts. You can specify whether the accounts in each subcategory must be included in specific types of reports. The account categories help define the layout of your financial statements. The next topic that we will discuss are dimensions. In financial analysis, a dimension is data that you can add to an entry as a kind of marker. This data is used to group entries with similar characteristics such as customers, regions, products, and salespersons, and easily retrieve these groups for analysis. Dimensions can be used on entries in journals, documents, and budgets. The term dimension describes how analysis occurs. A two-dimensional analysis, for example, would be sales per area. However, by using more than two dimensions, when creating an entry, you can carry out a more complex analysis, such as sales per sales campaign, per customer group, per area. Analyzing data by dimensions gives you greater insight into your business, so you can evaluate information such as how well your business is operating, where it is thriving, and where more resources should be allocated. Another example of the use of dimensions is when the cost controller wants to analyze the expenses per department. In order to do this, a dimension called department can be set up. A dimension value is one of the possible values for a particular dimension that you can add to your entry. For example, for each department, a dimension value will be set up, like sales, administration, manufacturing, and so on. Dimensions are used for the purpose of analysis. They enable users to analyze expenses by departments, sales, region, customer group, etc. Most financial transactions are posted to the general ledger through particular business documents, such as purchase invoices and sales orders. For business activities that are not represented by a document in Dynamics 365, such as smaller expenses or cash receipts, you can create the related transactions by posting journal lines in the General Journal window. You use general journals to post financial transactions directly to general ledger accounts and other accounts such as bank, customer, vendor, and employee accounts. Posting with a general journal always creates entries on general ledger accounts. Let's process one transaction in the general journal. I click on the Finance tab in the navigation pane, where you will see a variety of financial statements. Here we have the general journals. It is used to post to general ledger accounts, bank accounts, customer accounts, vendor accounts, or fixed asset accounts. I click Process and Edit Journal, and here are the steps to add a new entry. I start by adding the posting date. The work date is added by default, however, you can alter it if needed. The document type can be set to payment or invoice. The default document number will be automatically generated. The account type can be set to GL account, customer, vendor, bank account, fixed asset, IC partner, or employee. I will add one expense GL account. The other fields, such as the general posting type, general business posting group, and general product posting group, will be populated automatically into the GL accounts. I will add amount and balancing amount. And finally, I will add dimension department. When I am ready to post the document, I will click Post. Here I'm posting the lines. Now let's process the vendor payment. From Cash Management, I will open Payment Journal and Payment Journal Batch, where I will add document type, payment number, document number, and account type vendor. Then I have to select vendor number. On the right side of the journal, I can find column applies to document number, where I can select vendor invoice. The system has automatically populated the amount in the journal and balancing account. Now I'm ready to post, and the system will close this purchase invoice as paid. We can process customer payment in the same way. Here the system has a very nice functionality for quickly processing customer payments, which is called payment registration. And I will open this page from Global Search. From the payment registration page, you can process customer payments with just a few clicks and mark invoices as paid to automatically reconcile accounts. With bank account management functionality, you can create, operate, and manage multiple bank accounts to cater to your diverse business needs across different currencies, reconcile your bank statement data automatically, open bank account ledger entries, and keep track of all your bank statements. The next module I will present today is the Fixed Assets module. The Fixed Assets module helps you keep track of fixed assets and related transactions such as acquisitions, depreciations, write-downs, appreciations, and disposals. The Fixed Assets functionality in Dynamics 365 provides an overview of your fixed assets and ensures correct periodic depreciation. It also enables you to keep track of your maintenance costs, manage insurance policies, post fixed asset transactions, and generate various reports and statistics. For each fixed asset, you must set up a card containing information about the asset. You can set up buildings or production equipment as the main asset with a component list, and you can group them in various ways, such as by class, department, or location. Then you can begin to acquire, maintain, and sell the fixed assets. You can also set up budgeted assets. This makes it possible to include any anticipated acquisitions and sales in reports. To keep track of fixed asset depreciations as well as other financial transactions related to fixed assets, you set up one or more depreciation books for each fixed asset in your company. Depreciation is documented by running a report to calculate periodic depreciation and filling in the journal with the resulting entries ready to be posted. Dynamics 365 supports several depreciation methods. You can set up multiple depreciation books per fixed asset for different purposes, such as one for tax reporting and another one for internal reporting. For each asset, you can record maintenance costs and the next service date. Keeping track of maintenance expenses can be important for budgeting purposes and for making decisions about the replacement of a fixed asset. Each fixed asset can be attached to one or more insurance policies. You can therefore easily verify that insurance policy amounts are in accordance with the value of the assets that are linked to the policy. This also makes it easy to monitor annual insurance premiums. You can post fixed assets either with a purchase invoice or with Fixed Asset GL Journal. Let's process one purchase invoice. From the purchase invoice list, which I am now opening, I will click New and the system will open a new document. In the header, I will select a vendor from the vendor list. I will add a posting date and vendor invoice number. In the lines here, I can purchase an item, GL account, or a fixed asset, or I can post an item charge. I will select a fixed asset, the new office printer, and add the quantity and price. And when I'm ready with this, I will click Post. Now, moving on to our next topic of the day, account schedules. You can use account schedules to get insight into the financial data stored in your chart of accounts. You can obtain income statements, balance sheets, statements of cash flows, statements of retained earnings, and other financial reports. Account schedules analyze figures in GL accounts and compare general ledger entries with general ledger budget entries. These results are displayed as charts in your role center, like the cash flow chart, and reports like the income statement and balance sheet. You can access these two reports with the Financial Statements action from the role center. Business Central provides some sample account schedules you can use right away, or you can set up your own rows and columns to specify the figures you want to compare. For example, you can create account schedules to calculate profit margins on dimensions like departments or customer groups. You can create as many customized financial statements as you want. Setting up account schedules requires an understanding of the financial data in the chart of accounts. For example, you can view general ledger entries as percentages of budget entries. Account schedules are used to arrange the accounts listed in the chart of accounts in an easily presentable manner. You can set up various layouts to define the information that you want to extract from the chart of accounts. One of the main functions of account schedules is to provide a place for calculations that cannot be carried out directly in the chart of accounts, like creating subtotals for groups of accounts which can then be included and used in other totals. For example, users can create account schedules to calculate profit margins on dimensions such as departments or customer groups. In addition, general ledger entries and general ledger budget entries can be filtered by net change or debit amount. You can also compare two or more account schedules and column layouts by using formulas. Now let's see how the balance report is set up. There are lines which take figures directly from GL accounts. Some of the lines are set up as a formula. You can set up different row and amount types, and the rows can be bold or italic. From Process and Overview, you can see the figures in this report, and you can drill down to see GL accounts and transactions. The next topic we will discuss today is the cash flow forecast. With this functionality, you can evaluate upcoming cash flow and currency requirements to predict how your company's liquidity will evolve over time. Forecasting tools can be integrated with a general ledger, accounts payable and receivable, budgeting, and inventory management. A company's cash flow indicates its financial solvency and reveals whether the company can meet its financial obligations in a timely manner. To make sure a company is solvent, a future-oriented planning instrument is necessary. Building on the currency assets of the previous period, the program creates a periodic compilation and calculation of the forecasted operational revenues and expenses. Then, the program calculates the cash surplus or cash deficit. According to these results, the company can make adjustment measures, such as a credit reduction for a surplus or borrowing if there is a deficit. In Business Central, the following sources can be used to calculate a cash flow forecast: receivables, payables, liquid funds, manual expenses and revenues, sales and purchase orders, fixed assets, budgets and disposals, service orders, GL budgets, jobs, taxes, and Cortana intelligence. In the Accountant Role Center, the cash flow chart offers ways to analyze cash flow. Here you can see figures for a period by using the timeline slider. You can filter the chart by using the source and legend. You can change the length of the period or go to the previous or next period by choosing options from the Finance Performance drop-down. And you can view the entries by choosing a point in the chart. For example, a point on the timeline or a column segment. If the numbers seem off, this is where you can make adjustments. If you want to examine the forecast, in addition to forecast entries, you can also look at the cash flow worksheet. Here you can see how the forecast handles confirmed sales and purchases, subtracts payables and adds receivables, and skips duplicate sales orders and purchase orders. To view a cash flow worksheet, search for cash flow forecasts and choose the related link. Choose a cash flow forecast and then choose the cash flow worksheet action. On the cash flow worksheet page, choose the Suggest Worksheet Lines action. And here we can see all the documents and entries which are the source of figures in the cash flow forecast. With the Cost Accounting module, you get insight into costs of operations, departments, and projects to control overall company expenses. You can track non-financial unit accounts, allocate costs across your organization, budget and report available data, and manage allocations. Cost accounting can help you understand the cost of running a business. This information is designed to analyze what types of costs you incur when you run a business, where the costs occur, and who bears the costs. In cost accounting, you allocate actual and budgeted costs of operations, departments, products, and projects in order to analyze the profitability of your company. Cost accounting has the following main components: cost types, cost centers, and cost objects, cost entries and cost journals, cost allocations, cost budgets, and cost reporting. You define cost types, cost centers, and cost objects to analyze what the costs are, where the costs come from, and who should bear the costs. You define a chart of cost types with a structure and functionality that resembles the general ledger chart of accounts. You can transfer the general ledger income statement accounts or create your own chart of cost types. Cost centers and departments and profit centers that are responsible for costs and incomes. Often there are more cost centers set up in cost accounting than in any dimension that is set up in the general ledger. In the general ledger, usually only the first level cost centers for direct costs and initial costs are used. In cost accounting, additional cost centers are created for additional allocation levels. Cost objects are products, product groups, or services of a company. These are the finished goods of a company that carry the costs. You can link cost centers to departments and cost objects to projects in your company. In addition, you can link cost centers and cost objects to any dimension in the general ledger and supplement them with subtotals and titles. Allocations move costs and revenues between cost types, cost centers, and cost objects. Overhead costs are first posted to cost centers and then later changed to cost objects. For example, this might be done in a sales department that sells several products at the same time. Direct costs can be directly allocated to a cost object, such as a material purchased for a specific product. The allocation base that is used and the accuracy of the allocation definition have an influence on the results of cost allocations. The allocation definition is used to allocate costs first from so-called pre-cost centers to main cost centers, and then from cost centers to cost objects. Each allocation consists of an allocation source and one or more allocation targets. You can allocate actual values or budgeted values by using the static allocation method that is based on a definite value, such as square footage, or an established allocation ratio of 5 to 2 to 4. You can also allocate actual values or budgeted values by using the dynamic allocation method with 9 predefined allocation bases and 12 dynamic date ranges. The next topic we will discuss is deferrals. Deferrals help you recognize a revenue or an expense in a period other than the period in which the transaction was posted. You can use this functionality to automatically defer revenues and expenses over a specified schedule. To distribute revenues or expenses in the involved accounting periods, you set up a deferral template for the resource, item, or GL account that the revenue will be posted for. When you post the related sales or purchase document, the revenue or expense is deferred to the involved accounting periods according to the deferral schedule that is governed by the settings in the deferral template and the posting date. I will now demonstrate the posting of deferrals for an insurance. I have set up a deferral template for 12 months and attached it to an expense account. I will create a new purchase invoice. In the header, I will add a vendor invoice, and posting date. In lines, I will select GL account 6220 for car insurance, and I will add quantity 1 and line amount 12,000. When I am done adding in these entries, I will click Post, and the system will post this expense invoice. After this has been posted, I will open Posted Purchase Invoice, and with Actions and Navigate, through Actions and Navigate, I will open System Created Entries. I will remove posting date and click Find. Now I can check all GL entries posted from this purchase invoice. We can see that the system has automatically created GL entries for all 12 months. The last topic we will cover today are VAT statements. Most companies are required to periodically submit a VAT declaration. The VAT statement is used to specify the basis for calculating the VAT that is payable to the tax authorities. The VAT statement is defined based on the following: accounts in the chart of accounts window and entries in the VAT entries window. The advantage of using the VAT entries is that you can close these entries by posting the VAT settlement. When you work with VAT entries, you can locate VAT correction entries in previous accounting periods where the VAT statement is created. In Dynamics 365, the VAT statement is typically only defined during the initial company setup, and it is set up by the format that is required by the tax authorities. Additionally, it can be previewed and printed after it is defined. You can use the VAT statement window to calculate the VAT settlement amount for a specific period. By defining the VAT statement window, you determine how the statement is calculated and how it appears when it is printed. Each line in the VAT statement represents a filter on the GL entry table or the VAT entry table. You can also print the report for VAT statement. Regarding other modules in Business Central, the system is fully integrated with finances, sales, purchase, inventory, jobs, and manufacturing modules. You can learn more about these modules in our next webinars. Thank you for your attention.